Welcome to the absorption module price ladder analysis, where we'll be looking at the Eurobond first, then looking at the Euro stocks, and we'll be looking at two plays on the Bund and two absorption plays where we really look at a very key region being the 45s, 46s and 47s, and we'll be looking at that in context with the volume and volatility that will be going through on the ladder and how to observe various types of pattern. So what I'm going to be doing is I'm going to be playing this at 4 times the speed initially, just so we can get to the critical region that we want to analyze, and then we'll be looking as how we approach all the rest of our videos of how to really determine a high probability absorption play. So let's commence looking at this marker now. Now what we'll be watching is this 45 to 47 area, and you can really see in a rather anomaly area of absorption being the 46 to 45, where there's approximately 9,000 contracts that have been traded over here. And let me just bring this to your attention. So let's take a draw, and so what we're looking at is right over here, this area over here. So as you can see, there's 44, 45, 46, but namely this 45 and 46 region. So that's where we're keeping a very close eye on as we watched the absorption area. Now do remember, what's very important when you are watching an absorption area is to know the general momentum and the velocity of your market and how fast the exchange does happen at per price, and also knowing when there's an anomaly area of exchange. And when you observe that anomaly area of exchange, it temporarily puts a break in the market. And when you see that break, well, then what type of trading strategy are you going to deploy in order to effectively execute? So now let's have a look again and see how this market trades. So we've observed now that there's potentially someone that keeps on reloading the 45s. You can see keeps on reloading here at the 45, 46, and we've just jumped up to 47s. Again, been about 9,000 contracts, and we had a false little move below the 45s just to test. We just wanted to see if the market, and you can see now the trader is putting an order right in here at 46s. Observe that once it traded through the 45s, and we put in a 530 lot there and a 600 lot, it snapped straight back above the price again. So the moment it snapped straight back above the price again, it automatically telling you that the sellers are really struggling. They really are struggling to hold the market much below, and in the beginning we're noticing a very large amount of exchange happening at fairly rapid pace, and rapid pace being defined of how many lots are being traded in this instance per second. So the play that we're looking at here is an absorption play. The pattern type is a low of day iceberger. So always know at your critical areas, either your high of day or low day, what does a high amount of volume look like, or what does a low amount of volume look like. And when you see amount being exchanged of almost 10,000 contracts in this specific market in the Bund, once it's traded from the highs to the lows of the day, and you're seeing the market being blocked out of the 45s and 46s, well, we're looking to execute a potential trading strategy called the iceberg partner. And what you're going to be doing with the iceberg partner is you're going to be distributing your clip size. So the iceberg partner is effectively you're going to be partnering inside with the iceberg. So you're going to be positioning yourself where you're looking at the 167, 45 and 46s and potentially the 47s, and you're going to be distributing your clip in this area. Now your risk on the trade is effectively it shouldn't go lower than the 43s, because already we had a little peak below and the market snapped straight back above. So you're watching this area here, watching this area over here. As you see the lots being accumulated, we had 4,300 lots over here, another almost 6,000 lots over here. As the market offers into this bid over here keeps on reloading. So it disappears but then reloads, disappears and reloads. So it's either called a reloader or it's called an iceberg. And so the strategy is an iceberg partner, where you distribute your clip on the 45s, 46s, and you're scalping, between 1 to 3 ticks, and maybe building one little core position. So you could put in 2 lot in, another 2 lots, and then you're executing out for a couple of ticks. So just remember, That's how you want to execute this trade, where you're distributing your clip, you're scalping a few as the market blips up, and potentially holding core position for the market to trade a little bit higher. And that's how you want to be executing this trade. So let's watch how this trade is being executed. We're quite fortunate to see this trade being executed in real time once the trader has observed this absorption. He's clipping away with clips of 2 lots. So now let's have a look how this really trades out. So as you can see, he's waiting to get his fill. Got his fill. Now look here, it's gone 300 lot offered. But let's watch now as the market. You can see there's the absorption between 45s. Where the reloading happens, and it failed to follow through to the downside, just what we discussed. Now let's have a look. So it's 200 lot offered at 46s, and we want to see if the iceberg still maintains itself. Now it's just gone, there we go, it's reloaded the 46s. We've gone up now a couple of ticks on side, 3-4 ticks, might start scalping, so I've just scalped out at the 46s. Now you'll see that this market actually continues a little bit higher. So in the first instance, the trader just entered the absorption, scalped it for 3 ticks. But if the market comes back here again, as you can see, it's come back here again. We've got 6,000 lots now. The trader's getting a little bit more aggressive over here at the 45s. So notice it came back down, went bid back again, has bought 2 lots, actually scalped, bought 4 lots, scalped 2 out at 45s, and now it's gone on side again. So again, already there's just a lot of absorption. Now the absorption play can shift from high velocity environment where the offers are being hit quite aggressively into the bid, and the market holds up nicely. Now, when the market really starts moving away and really starts moving towards the upside, so as the market starts moving towards the upside, if the offer comes back down and the velocity of the sell orders going through the book start decreasing relative to what it was doing in the first instance when it first started trading between 45s and 46s. So what I'm saying is, when there were maybe 500 lots going through the market per 30 seconds, slows down to 500 lots per 1 minute, well, all of a sudden the sellers are slowly starting to lose they're slowly starting to lose their power and the ability to hit the bid, and I mean to absolutely hit the bid. So what you're doing in that instance, you're starting to say, well, all of a sudden this market is tiring on the sell side, and as it starts tiring on the sell side, your conviction levels on the buy side start actually increasing. So in the first instance, you observe that there's a potential reload on iceberg, so you're more scalping. But then once the seller starts slowing down, you start saying, well, potentially the buyer is going to win this battle. And in that instance, the market can actually start rotating a lot higher as the sellers, for at least this round, start giving up. So we're going to start watching how this really starts trading out. So let's have a look as we continue watching this area now over here. So we've been absorbed the 46. You can see the activity has started to slow down as the buyers now start really moving upwards along the price ladder, start moving up the page, and you can see, look how obvious this is. We have almost 15,000 contracts trading at 46s and 45s. So a clear iceberg, a clear potential volume slice order, not a potential time slice order, but a volume slice and an iceberg. And so the trading strategy is you join the iceberg that you observe, or if you are short, you start exiting your position. So really very key to understand where you observe an iceberg at a high or a low of a day, and it helps you manage your position a lot more effectively. So what we're going to do now, we're shifting our observation to the Euro stocks. You can see we've just gone short here on the Euro stocks. This is going to be another pattern that we're going to be trading, an absorption pattern at the high of day in the Euro stocks. Now here is what we're looking at. So let's look. So in the Euro stocks, we're looking at an absorption at the high of day. Remember, you always know what an absorption at the high of day or the low of day is when you understand your market intrinsically well. And so, in the oil market, it might be a 300 lot and a 400 lot being distributed at the high of day. In the Euro stocks, it's between 7 to 10,000 lots. So through your observations, through your journalizing, as you watch your markets day in, day out, you start getting to understand the specific personality of your market. And once you start understanding the specific personality of your market, you know what a potential strong iceberg is. And given the speed that the market is auctioning the orders and the orders that are being traded on the book, you're able to execute a lot more confidently because you understand your market's personality. So what we're looking for here again is an iceberg partner. We're looking for an iceberg partner distribution. The market environment is high volume, moving to low auctioning activity. So what I mean by that is, firstly, there's a lot of intense volume that's going through. At that stage, you might actually wait because the VPOC has shifted, with VPOC meaning the volume point of control, where the most area of volume has been traded. So if the most area of volume been traded has moved towards the upside, and as it's moved towards the upside, if the volume velocity on the orders being traded continues in an aggressive manner, the iceberg might start giving up his position and the market could continue towards the upside. So the best way to trade this is you see the iceberg and the absorption happening, or the reloading happening on the offer side, but then all of a sudden the buy side activity starts decreasing in activity and the auctioning starts decreasing. And the moment you notice that the auctioning speed starts decreasing, then you know that the absorber is starting to win the battle, and that's when you start actually entering your trade. So what again you want to see, first you want to observe the absorber, and once you have observed the absorber or the iceberg, you want to see the velocity exchange on the prices start decreasing, the relative rate of exchange start decreasing. And the trade, what we're looking for over here is we're looking for a scalp. Your risk management, 1 to 3 ticks. Your reward management is effectively looking for the low volume node here at the 82s. And as the market starts trading, you want to see how the market starts trading back towards this area over here. So let's have a look how this continues to trade. So we're looking at the 89s, and you can see, okay, we still gets re-offered at the 89s, gets re-offered, the iceberg is there, 10,000 lots being charged at the 89s, and keeps on changing. But all of a sudden what is happening, that the bids are 1 lot, 5 lot on the bid, 1 lot again, really struggling, and the offers are a little bit stronger. There is a bit of a buy here at 88s, but once he steps out the way, and if he can't lift the 89s, well, then it's going to start to. So you can see all of a sudden the bid is still trying to maintain. There we go, 700 lots have gone through, but the offer reloads again. Reloads, and he puts a nice firm stomp on there of another 800 lots. 500 lots over here. Now the bid is still struggling to go towards the upside, and we're just slowly observing. What we want to see is, you see this green box here and the white box. You want to see this speed start slowing down, because the moment it starts slowing down, the auction market theory suggests that as it starts slowing down, the market will want to auction towards the other side. And as we watch over here, the market, once it starts really slowing down on the velocity, as we discussed in the previous module of market velocity, we really start seeing the market potentially moving back down towards the 82. So still watching this. The trader at the moment still holding his 89s because he's liking what he's seeing at 89s. He's liking every time the buyer steps up towards 89, he re-offers. Now all of a sudden the 88s have disappeared. So now look here, the 88s have stepped back in, but he's not taking much of 89. 89 is still standing firm. Now we've just had to go on quickly bid over. There's still some size here. The trader is still holding on to his 89s. The risk on this trade will potentially be at the 92s. 1, 2, 3 ticks. Might be able to get a short, but again the 89s holds firm. We've now had 20,000 contracts traded at 88. We've had 13,000 contracts traded at 89 and 6,000 contracts traded at 90. I mean, a significant amount of volume trading up here, and there's going to be a pinch point. It's always the ability to collect where the pinch point, where the buyers will start feeling the pain. If this market starts trading, below 87, 86, the buyers will potentially start covering back towards this low volume node. So again, 89s and 90s keep on holding, and as you see, as this video continues, you'll slowly start seeing the velocity and volume on the ladder really starting to slow down, and as that starts slowing down, it starts suggesting that the seller is starting to win at this battle. And we're still watching 89, still holding 88s, keeps on. So it's this battle between 88s and 89s, but because the velocity is slowing down, it's starting to really, for the first time now, the 88s are trying to hold the offer. You see now the 88s are coming and holding the offer. A lot more company there. 87s have been taken out now. So the 88s, 87s. Now, are we going to get a little bit more pain towards the downside? Are 86 going to be taken? I'm doing almost a horse commentary for you right here. But we can start seeing that the 86s have been taken out, the 85s have been taken out, and as the market slowly starts moving towards the 82s, and the trader actually exited 85s, but subsequently this market did start moving towards this low volume node. So that's really two key illustrations of absorption plays, one in the Euro Stoxx at the high of day, one in the Bund at the low of day. You can see that the Bund now has moved up towards the 52. So two really beautiful absorption plays, and how to scalp and trade around them, and how to potentially build a core position. And this is really important on how to position on potential volume slice orders or on iceberg partner plays.